of mine almost lost everything on a futures trade last week. But guess what? He came out with over 80% because he applied some strategies I shared with him. And it's not just him. Others in my community are using this simple trick to stay profitable even when the market is crashing like crazy. Now, if you've been thinking futures trading is too hard or too risky, that is probably why you've been losing all this while. Now let's get that up today. In this video, I'm going to show you 4 uncommon tips that will help you make monies and also help you protect your capital if you are trading futures. And the best part is if you apply these 4 tips, you can become profitable even if you are just starting out. Now these tips are not the usual ones you see everywhere on YouTube. These are the same tips smart and top traders are using to avoid losses, and they use it to keep winning. Now if you stick with me for the next few minutes, you understand how the top traders are trading without losing and blowing their accounts. Welcome back to 𝗦𝗲 and Coins, and on this channel, we show you tips and strategies that people out there, the top crypto traders out there, do not want you to have your hands on. Now the tips and the strategies we share on this channel are capable of making you a whole lot of money if you put them to use. And if you like content like this, I'd like you to subscribe to this channel, turn on post notification, and also like and share these videos to people that are interested in content like this. Now you also want to check out the first link in the description, and that link takes you to our Telegram communities where we share free signals that do as high as 300 to 600% every single day. And trust me, you do not want to miss out on this. So click the first link in the description to get access to our Telegram community right now. Now with that being said, let's dive right into the video of today. Now if you're watching this video, there's a slight chance that you have probably traded futures in the past, or you already know what futures trading is. But if you're a complete beginner who is super confused and you are new to this place, you want to check out the second link in the description. I made a detailed video that shows you step by step how you can trade futures on the Bybit platform without any confusion, without stress, and without any complex method. So use the second link in the description to get access to that video right now. Now with that being said, let's dive right into the video of today. So if you've always wanted to stay on top of your game, always keep these 4 strategies in mind whenever you want to execute a trade. Now pay attention to the third point because it's really going to change the way you see futures trading. So stick to the end of this video so you don't miss out on point number 3. Now point 1, as a beginner, you should avoid trading coins with high volatility so you don't get liquidated in the market. There are coins in the market that jump at 20, 40, even 100% in a day. And it's quite tempting, and you're thinking, if you jump in right now, you become rich super fast. But here's the truth. Those fast moving coins are super dangerous, especially for a beginner like yourself. They move up quickly, but they also crash even faster, and that's why we call them highly volatile. So volatility just means that the price jumps up and down in a very short period of time. And if you're not experienced with this kind of move, you will get liquidated and you will lose all your money in a single go. So instead of chasing those crazy coins out there that are highly volatile, I'd advise you to stick to major coins like BNB, Solana, Ethereum, and the rest. Because coins like this are more stable and they don't move too much, which means that they are less volatile. So as a beginner, it's better for you to trade coins that move slower and are more predictable. That way you can protect your capital, learn how the market works, and still make good profit, especially when the market moves in your direction. Point number 2, avoid using high leverages. 2x, 3x is quite enough for you as a beginner. Now let's talk about leverage, because this is where a lot of beginners get wrecked out. They burn their money, especially because they don't understand what they are doing. Now here's how leverage works. Leverage is like you trading with borrowed money. Take for instance, you have $100 in your trading wallet, right? So if you set your leverage to 10x, what you're simply doing is increasing the purchasing power of your capital. So that means the leverage 10x times the available balance on your wallet, which is $100 times 10x leverage, that is $1,000. So you're buying with the purchasing power of $1,000 and not just $100 that is available on your account. And I know you're already thinking, if the price goes up a little, you're going to make more money. But here's what they don't tell you. If the price goes down a little also, you lose more money. And you could also lose everything, and that is what is called liquidation. Your entire capital, your entire balance can be wiped out in a matter of seconds or minutes, depending on the amount of leverage you use. Which is why it's advisable as a beginner to not go anything above 2x to 3x leverage if you're just starting out. Now imagine if you are using 100x leverage. Even the slightest 1% of a move will wipe your account in a matter of seconds. Now that is why this is very, very dangerous. So like I said before, stick to either 2x or 3x leverage as a beginner. And if you have $100 in your account, you are simply trading with 2x or 3x, which is 2 or 3 times your current purchasing power available in your wallet, which is either $200 or $300 from your initial $100 available in your wallet, because you're using a 2x or 3x leverage. I hope that's quite understandable. So this gives you room to make more and also helps you protect your capital so you don't get wiped out by small movements in the market, and in turn also lose all the money you have in your balance. Now point number 3, apply DCA, which means dollar cost averaging. Now, dollar cost averaging is an investment strategy where individuals regularly purchases a fixed amount of an asset over time with the aim to reduce the impact of market volatility on the overall purchase. Now, let's say you want to buy 100,000 naira worth of BTC. Now, instead of buying it at a price when BTC is high, you can simply split that 100,000 naira into multiple smaller parts. Let's say into 5 parts, for instance, which is 20,000 naira each, right? So you buy 20,000 naira worth of BTC today, and maybe after tomorrow, BTC reduced in price a little bit, you buy again. Maybe the next following week, it reduces again, you buy, up until when you have used up the whole 100,000 naira. Now, what you're doing is called dollar cost averaging. You're investing your money into BTC little by little over time, instead of buying everything all at once at a particular or specific price. Now, BTC goes up and down a lot. Today, it might be at $100,000. Tomorrow, it might be at $80,000. Now, if you bought BTC with the whole $100,000 at a point when price was high, you discover that you'll be stuck at some point because the value of your investment begins to drop. And that is why some people cry when they look at their crypto portfolio portfolio because the price of the coins has dropped down drastically from the point where they bought from. So you bought BTC at 100,000 naira, and you come back a few days later and you are seeing your crypto portfolio reading 20,000 naira instead, which means that every of the coins you bought at 100,000 naira went down in value to 20,000 naira. And why is that? It's because you bought with the whole amount you intended to buy with at a particular price in time. And when the value depreciated, your money also depreciated in value. But if you split the money into multiple parts and you are buying at different price points in the market, this helps you reduce risks and helps you reduce the pressure of timing the market. Even the top crypto traders out there use this strategy because it's a smart way to build your position slowly, especially in a volatile market. And point number 4, follow a trading plan. Now, before you start trading, you need a trading plan. Stuff like your entry point, your exit point if stuff goes wrong, and your target if things goes the right way. Now, this isn't optional. This is a safety precaution that you need to have in place. Now, let's be real for a second. Most beginners just open their trading app, they see a coin going up, and they think to themselves, you know what, let me just jump in on this coin as it's going up. I mean, just make some few cash. But then the price drops and they begin to panic. And this time, they don't know whether to hold the coins or sell it. And that right there is called trading without a plan, and it's the fastest way to lose your money as a complete beginner. Now, let's break it down like this. Imagine you're traveling to a new city that you have never been before, right? You would not just start your car, get into it, and head out to a place without a direction, right? You will need a map. And obviously, you need to find out if there are some ways or some roads that are blocked to make the journey easier for you, right? And that's the same thing with trading. Before you press the buy or the sell button, you need the following thing I'm about to mention clear in your head. Number 1, where do you enter? Now, this is your entry point. It's the start of the journey. It's the start of that particular trade. So you want to do a thorough analysis of what you are trading to determine a specific entry point that is ideal for your trading. Now, this way, you're not just jumping in on that trade because it makes sense to you, but because your analysis says it makes sense to you to enter from that point in time. Now, the second question you need to ask yourself is, what if you're wrong? And that is your exit plan. That is where the stop loss comes in. And this is where you decide ahead of time for that particular trade that if the trade goes against you, the system should cut your losses at a specific point in time. That way, you're not just seated there and watching all your entire capital crash before your eyes. And the third question is, what if you're right? And this is the target where you want to take your profits. This is what is called the take profit. And this is where you don't want to get greedy and start aiming at a specific point in price where the market will most likely not get to. You simply want to target at least 3 times your initial capital, at least 3 times profit of your initial investment. So for instance, you're risking a $10 amount on a particular trade, you simply want to target a profit level of $30. So when the market reaches that point in time or that point in price, the market automatically takes you out and keeps and secures your profit for you. Also, you want to also take note of your position size. How much are you willing to risk on a particular trade? 10% of your account, 5% of your account, 20% of your account. Now, if you don't determine this before you enter the trade, your emotions will get the better of you and you can mess things up. A proper trading plan tells you how much you put in and help keep your risks in control. Now, the next one here is the market conditions. You don't trade the same way in all markets. You want to determine if the market is a trending market, if it's a ranging market, or if the market is volatile at that point in time. So before entering a trade, define whether your strategy fits that particular environment at that point in time, or if you should sit that particular trade out. So if the conditions on the market does not favor your trade at that particular point in time, there is no need for you to go in on that trade. Lastly, you need to review and journal your trading journey. After every trade you take, whether you win them or you lose them, you need to write down exactly what happened, what went wrong. Did you follow your plans? Did your emotion get the better of you? Did your emotions interfere at some point on that trade? And also, what can you do to improve your next trade to make it more better and more profitable for you? So your trading journal is actually where the real growth itself happened, because this way you can be able to monitor everything that has gone wrong in the past and use them as a structure to make things better for your future trades. So having this full plan in place is like wearing a seatbelt. You don't wear it because you expect to crash in the car. You wear it because you want to survive even if you crash. So the next time you take a trade, take a pause and ask yourself, are you going into this trade with a trading plan that you've got? And if you can answer that question comfortably and confidently, you are well assured to know that you are trading and not just gambling your money. If you're approaching the crypto space with a gambling mentality, trust me when I say this, that you will lose everything you decide to put into it. So if you're still watching this, congratulations, because you're already ahead of 99% of traders who jump into trading futures blindly. And this is exactly where you're going to win with the strategies you have just learned right now on this video. Now, to help you even more, I'm giving you access to my free Telegram Signal community, where we drop up to 3 high profitable trades every day for free, with no hidden fees at all, just pure value to help you grow your capital safer and faster. So click the first link in the description to get access to our crypto community right now. Now, in my next video, I'll be exposing a potentially profitable coin that is capable of doing over 1,000% on the crypto space. Trust me, it's a game changer and you do not want to miss out on it. So hit that subscribe button, turn on post notifications so you don't miss out on the next video coming up. Also, don't forget to like and share this video to someone that may be in need of it. And thank you for watching. Now take what you've learned from this video, apply it on the chart, and I'll see you on the next one. Bye for now.